Hello again. I know it's been way too long since I've done a video. I will try to be more diligent in this new year. 2020 was crazy to say the least, so I will try to be more diligent in keeping up with my videos. Hopefully, I'll be less preoccupied with crazy stuff. I hope that for everybody. Oh my gosh. Anyways, let's get into it. All right, so stock market and the economy. Well, the stock market did really well because the economy didn't come to a screeching halt. That is why we saw the markets move the way that they moved. A lot of people were surprised that the stock market ended up with record highs. That doesn't surprise me one bit because everyone had anticipated the economy to come to a screeching halt, like completely stopped. And it didn't, which is why the markets were moving favorably. On top of that, you have to remember that stock market is based on humans. We are the foundation of the stock market. It's people. And we as human beings, we love to feel happy. We don't like to feel bad. So with all the craziness that happened in 2020 and what seemed like a never ending stream of just horrible news all the time, of course, people are want to feel good about something. And, there were good investments to be had. There were lots of good deals during the downturn in March with the stock market dropping quite a bit. It dropped 30%. There were a lot of discounted stocks and people bought. And so and then it pushed the markets upward. And again, the markets reacted very positively just because the economy didn't come to a screeching halt. We didn't go into a recession, which I told you it would be very difficult for us to do. And I figured as much that we wouldn't. And so we actually did pretty well economically. And so that translated to the stock market. So there's the update on that. Okay, so what I really want to discuss today is there's a question that I have been asked quite often throughout the years, but it seems like I've been asked this more often recently than I have in the past. So let's get into it. So the question I get asked quite frequently is, what if the market goes to zero? Okay, when people are asking me this question, they're not referring to that the market drops and then comes back up. They're referring to the market drops and it stays there. Okay, let me put your mind at ease. The stock market, never in the history of the stock market has it gone to zero and stayed there. In fact, it's technically not even gone to zero, even during the financial crisis of '08 or the Great Depression of the 30s or the stock market crash of the 1929. Don't get me wrong, stock market crash of 1929 was like 80%. It was atrocious. It was almost zero. Like that was the closest to zero we ever got. But we officially didn't hit zero, and the market definitely didn't stay at zero. In order for the stock market to go to zero and stay there. Now, let me clarify. I'm talking about the stock market, not individual stocks. Individual stocks can absolutely hit zero and disappear off the face of the grid. But the stock market itself as a whole entity, for it to go to zero and stay there, I mean, it would have to be a very large catastrophic event. It can't even be a whole bunch of small events over the course of a time frame. It would have to be very large, one time out of nowhere catastrophic event. And the reason I say that is because if there are small changes to the economy or small events that happen, we will acclimate to them as they happen. If there's one gigantic, event or a couple of really big events, then that might be enough. I mean, they would have to be catastrophic in order for the markets to go to zero and stay there. And if, all honesty, if that happens, you're not going to be worrying about the stock market. You're not going to be worrying about money because the new currency will probably be food and ammo. So let's be honest about that. So even again, with even the '08 crisis where we lost 50% of the market, it went down and it started pushing up immediately after it went down, and it took 4 years, but we came up to our pre-2008 levels, and then since then we have surpassed it. So it's really, I mean, kind of almost unfathomable that it would go to zero and stay at zero unless there was a really big event. And I feel like people don't really understand how big the stock market itself is. The NYSE, on a daily basis transacts in the trillions of dollars. And so, I mean, it's a juggernaut in size. And so it's very difficult to imagine that, something of that magnitude could be pushed down to zero and stay and kept at zero. Again, it can drop very quickly. We've seen it happen, multiple times. The most recent being with the whole virus situation in March of 2020, the market fell 30%. I mean, just like that, just very quickly in a matter of 2 weeks, it dropped precipitously and hit 30% below, and then it started rebounding pretty quickly up. And so, it went down and made a V-shaped recovery, as I've shown you in the previous videos, and it didn't stay down. So it can have big dips, don't get me wrong, but to have it stay there is, again, that's a pretty hard sell, to be truthful. It would, again, take a fairly large event or a series of very big catastrophic events for it to stay there. So hopefully that answers that question and puts some people's minds at ease. Again, as always, if you guys have any questions, put them in the comment section below, and hit that subscribe button, and I will talk with you later.